Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it is non-farm payroll today, Friday, May the 3rd. I have to check every once in a while and make sure we are in the middle of, or near the middle of the year already. Welcome, welcome. Gotta love this non-farm payroll this morning. What a sudden lurch northward. All right. So we run these highs out. Back into that weekly fair value gap again. They got that daily fair value gap resting just above us here. So I'm looking for more upside prices into this daily fair value gap. I run into here today. If we get some leverage off of this or some support off this weekly, we're looking for higher prices to dig into this daily fair value gap above us. Make sure we are live. Just going to double check that as usual. And we are live this morning. Who's first through the door today? Hans, good morning. Hans is the first one through the door today. Welcome, welcome, Hans. How's everything over there in Sweden? Switzerland? Sweden, I think it is, isn't it? Should be late in the evening or early afternoon for you guys over there. Okay. What are we dealing with here? Let's go to ES. So I'm looking for more upside prices here. Unless we get a significant swing above this high here and we get something that gives us, I want to see this candle's low get taken, consolidation here. I don't want to see a clean up with a nice little reversal. A nice little reversal. Okay. So far, the mean threshold of this candle is holding. We've taken out these highs. We're back to a fair value gap on the weekly. All we have is above us is the weekly fair value gap. Look at this here. There's one right here, imbalance, which we've just filled. We might just have a wick and then a return into here. See if this mean threshold holds. Then I want to see it trade below this candle here. Trade back into it. That's on the weekly basis. So. Yeah, that looks right. That's what I like to see there. Okay. What do we get on here for confluences? Nothing. There's no setup there. Got that elusive bolt flag that's sitting. So we ran right through that yesterday. So we're looking for the same kind of thing up here for the Dow. Looking for a run back up into this fair value gap above us here. So you've got two that are looking for fair value gaps above them. And this is just a rejection block. Everything else has been revisited. Retail wants this to go up with this bull flag. Equal highs. We got nothing solid right now. Dixie on the big dive down now. Should be pushing everything else back up. So we're looking for a run into this fair value gap some more. We've now got a body that's traded below this swing point here. And hard to call this one, but just coming to this, if we just come down, we dig down deeper into this order block here, into the mean threshold of that daily, see a reaction off of that. We get a retracement back up inside this. Anywhere inside this weekly fair value gap again. Find some support off of this and continue on the downside. Tomorrow could be the, not tomorrow. What are we looking at? Monday. 4, 3, 4. So it'll be 5. Tuesday. Yeah, I'd like to see it get back up into here. Bottom of this weekly fair value gap again before going lower. This should start pushing up on the euro. So the euro dollar should be climbing. If the American dollar does dip down some more, look for, see, we're in the mean threshold of this fair value gap here on the daily. Get to come back and revisit this old high or the bodies for a fill of the fair value gap. Well, it wouldn't be a fill. It would be just a return to these old highs here. Eliminate that wick, either hit the wick or into the bodies here. If we continue pushing higher, look for a fill of this fair value gap here off this breaker and see if we get that is an up close candle. Open 3, 5, 9, 3. No, it's a down candle. Changes things up a bit. We're off the mean threshold. Mean threshold of this Sibia's holding price right now. Just dipped into it a little bit. Yeah, I'm looking. Oh, this one, big bold candle. That's a massive swing for a swing. Let's see if we get below this on the 1 minute here. Similar situation, we've hit this breaker here, this 2-day breaker body, and we're getting a reaction off of that. So if we get a run back down into, again, these old highs, bottom of the inversion, fair value gap here. Oops. It'd be nice to see if it stayed inside this, found some support, continue pushing higher, get on top of that, start eating up the rest. We get a return back into this swing breaker here. We get a body close below this one today. Tomorrow or Monday we trade back into this, and then Tuesday continue on the downside. That's the key level I'm looking for in CAD. That would support that. Okay. We're inside this mean threshold. New Zealand dollar, I'd like to see it push through the mean threshold, start digging higher, close above the mean threshold, if not back towards the fair value gap here. Monday, come down, revisit the fair value gap, and then continue higher, leaving this open. I'd like to see that. See, Aussie dollar's taking out those highs. What we're looking for in New Zealand dollar, Australian dollar's done already. So we're looking for these this mean threshold to give way, rejection block, and take that high. And see how the New Zealand dollar went straight through that, or the Aussie dollar went straight through that, accomplish what we're looking for New Zealand dollar to do next. Now I'm looking, you'd look for a swing. Anything that looks like it's setting up a swing in here. For a pull back into this range here on the daily. So you'd be looking for a swing setup at 10 o'clock. Look for the swing. It's come down. Japanese yen's hit rid of these equal highs here. Fill the fair value gap. We're getting a kickback on that. Let's see if we can see a reversal here. Reversal. So you're looking for this area, and then you're looking for the kind of reversal that supports a higher time frame key level for you expect a reversal to happen. So then you dig down into here and you look for a reversal pattern. We have one here for this small fair value gap here. Well, the body trade's just above it. Can't get back to it. So look for this candle here. Runs above it. Comes back inside it. You're long from that point. If you didn't take this one, you took this one. Body trades above it right here. You trade back into it here. So you get long there. Now you want that to continue running back up. So as you break those highs, you start getting into these. I'd start paying myself. You're on a Friday. And then move yourself into break even, or your profits into break even, and let it run for the rest of the day. So that's the kind of thing you're looking for on these key levels. Once they're hit, those higher time frame ones, and I'm not so sure about those because it looks like they've still got some work to do. Downside, fill right here on the daily. See that? You look for a reversal here on oil. Here's the reversal. So you watch to see if this candle closes below here. Usually you want to see that, tap that and start leaving equal lows. You're probably not going to leave those untouched. So if it takes these lows out, look for the next swing point. If it doesn't, I don't think you'd want to leave those equal lows untouched yet. What's the high of that candle there? 73. The low of these candles are 81. So this isn't filled yet. $78, $73. $81. Not a full fill. So when you see this thing get filled, it looks like it's overshot it already. Of course it has. What am I looking at? What was it overshot over here? Sorry. What is it? That was yesterday's candle. Use this. I'm looking at this today's candle going. Ah, my head's not this morning. So yesterday would have been the swing point. 78.45. Right here. That's the one that took it out. So this is the kind of thing I want you to look for. So you see a significant area get taken and you wait for a swing to happen. So here's your swing. Took out this low. Body takes out the high of this fair value gap here. You return back into it right here to go long. I think we talked about this one yesterday because this looks familiar. That's your setup. So anyway, those are the kind of things I'm looking for a perfect place to look for an opportunity to go long or short. Okay, so we swept those. So now you look for that reversal again here. Mean threshold. So ETFs. Gold. Swing below these lows. This is a fill. That fair value gap down here. That's done. Reversal. Body breaks the high. Come back inside it right there. Extend longer. Small one from here to here. Inside that. premium, discount, premium array, discount array, inside a larger range. You can get through this candle here on top, start looking for higher prices, start looking for this old high here, rejection, or the SIBI on this side. You gotta get through this candle here first, do though. Look for these to provide a level of support. This inversion to go higher. Banks. Bitcoin. So we get a return back into this fair value gap here. Look for a reversal. Down to use the lower time frames for a reversal here. Even off of that candle's body. Look for little reversals in here now, right off that, down in the 1 minute. Soybeans. Nothing really sweet, clean in there. You're up off the rejection block here. Look at this wick right here. Take your wick, split it into quarters. If you lose the 50%, look for higher prices. It stays in the first 25% of that wick and starts to retrace off of that. It's got to close below here. Otherwise it's bullish. Friday. Love Fridays. We've now cleared these old highs here. You want to see that close above those highs? Not just do a quick stop run. Then you get back up into these fair value gaps over here on corn. Nothing sugar, it's flat. Nice return to coffee. Continuation on the downside. Looking for it, yeah. Old highs. Fair value gap below you here. Looking for corn or coffee to continue down into the fair value gaps below us. If you're looking at this range here, look for the fair value gaps below you in corn, or sorry, coffee. So I think coffee's going down some more. Flat on cattle, not sure. Old high, reversal. If you get above this candle's gap here, next week would be interesting to run back up into this, revisit this fair value gap above you, or this gap in price above you. Cocoa's coming back into this imbalance above it here for a continuation down. I think we're still coming back into this area down here. 66.92. lean hogs. Return back up into these old lows. Continuation down into the gap. We're in the midpoint of it right now, so I'd look for a return back up into this order block here. Unless they leave this open. So look for a return to, it's already hit this low here. Be a continuation on the downside, leaving this open. Look for a reversal today in lean hogs if you're into lean hogs. We'll get back over here. And we're sideways on this one. Waiting to see what happens here. Oh, Denmark. There you go. Thanks, Hans. Tommy, good morning. Don't forget to hit the button. Thanks, Tommy. Not just me, Darren. I don't know how he got in there. $13 people on a Friday. Yeah, got nothing. We'll have to wait till he opened. This pushes higher. Oh, we get a snap back down. Looking higher. I'd expect to see this just wiggle, drop down. Take that out and start moving higher. Wiggle. That's a ICT technical term. Wiggle. What are the folks saying here? $38,934, says Derek. Oh, these relative equal lows down here that was never cleaned up. There's the open. I like the way you're thinking, Erica. Take that high out again. Oh, here you go. I agree with you, Erica. Job openings negative, which makes possibility increase the unemployment rate lower number. Theory. Yeah, it's 1 minute. Short position for Just want to make sure it's, you can't push it higher. Opinion. See this right here? Body breaks that high, open, come right back and tapped it. Just saw it right now. So you're looking for a big dig up into this daily fair value gap above us here. 39.9. 39 big figure. 39.80, 39.70. That range. Unless we just pop into this thing and just clean these old highs out. Return to the body. And see what kind of reaction we get off this. Oh, look, there's a short. I just totally missed this one too. There you go. There's one right there. Taking the highs out, reversal, pop back in. Some of you might want to wait here or here. But there's your first opportunity right there for a short. You'll know when it takes this out, comes back inside it. Then you have to ask yourself, are you going to take the low one, or are you going to wait for it to come back up into your higher PD array? So if you did get in on this one here, pay yourself at the breaker down here. Right there. So 38.90 to here, 38. So you got 27 handles from here to here. Almost perfect entry with a perfect exit. Now you want to see it. I'd like to see it come back up in here, give us one more opportunity before taking this low out. or you go from like array to like array. You're looking for this swing point. See how it came back right to a perfect swing? So if you're trading from one to the other, there's your like array to like array. Now you want to see this one give way on the downside. If you close below that, get between this one and this one right now. This fair value gap is now filled. The wiggle room would be like the mean threshold of this candle here. If you were going long. Because then if it trades below that, comes back to it, you can get short, get break even there. I'd like to see this have a nice big retracement back up into here. Catch your short off of that. Take this low. Continue back down into this fair value gap. If it runs straight through it with a body and comes back to it, that would be the level of support I'd be looking for to go lower. So if that's your opportunity to go long above these old highs, you see the reversal happen, you get out, you go short, back to here, reload on again to go long. When you get back into here, you get out. So if you're looking for a reversal, so you're going from high to low to high, array to array, and then from array back to array again. So we would have called a 1, 2, 3. You're looking for 4. You're looking for these directions. Just kind of watch your price action right now. You want to see this run all the way back up into this level here. And you want 1, 2, 3 different levels. Stop loss would be up here. And we're just watching it. Just reading price, see where it goes. Watch right there. There's return from array to array again, right there. So you've had like array to like array, and then like array back to like array again. So looking at the mean threshold of this one. There's one more. Now this is the ultimate one, because if this one fails and you trade through it, you come back to it, you can break even. But if that mean threshold one holds, then you're going from like array again inside this range to this little guy right here. And if you run all the way back down into order block, you're hitting this array again. Looking at the premium and discounts. See where that candle closes. Good morning, Fernando. Abs, haven't seen you for a while, buddy. How are things? How you doing out there, Abs? I'm really tired this morning. I feel so foggy-brained. Low energy. Probably all that sleep apnea of mine. It's been something like crazy on my mind lately. Because of that severe diagnosis, I worry about sleeping now. So I have to find out. I still have to be part of a study that I haven't even got into. I haven't heard anything from anybody yet. So it's not one thing, it's another. All right, so we're still getting a reaction off that mean threshold or the consequent encroachment. Look for the consequent encroachment of this one. This one. So right here is your so further upside, continuation into the fair value gap. If we break this high here on a close, come back and use this as support. That popped in there, ran to this guy. Bodies respect the lows. Wicks do the damage. Fill the fair value gap. Didn't quite hit the mean threshold though, but hit the breaker. Multiple times, tapping on the breaker. Finally ran up. So you've gone from like array to like array, like array to like array. Again, says multiple times you could have traded inside here if you believe in this theory, this setup, this array belief. So that mean threshold's holding that, or the consequent encroachment is holding that one there. If I pulled it to this one here, you'd see the bodies respecting it. Wiggle, 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 wiggle. So pull your fib tool here. Bottom half. This little guy here. right here. 62% puts you right on the fill. There's your discount right there, just below 50%. That's all it needs to do sometimes, just come back to the 50% inside that fair value gap. Now watch here, if I go like this. The 25% didn't even hit 50% of the consequent encroachment of that BISI, but just enough to dip into the 50% of this range right here that's just created a small little range. So if you were trading back in the range and you took that trade, traded back into the range, 50%, you'd move to break even and pay yourself. And if it came back and took you out, you got paid right there at that 50% using that fib tool method I showed many times. And then if you just rinse and repeat, trade back on, pull your fib, if it comes back to 50% again, pay yourself again. And these are all from 50%, 908. There's like 30 handles here. 908. What's this one? So 910. That's 40. There's almost 50 handles right there. Is that 50 handles? 63. Yeah, that's 50 handles. From there to there. On a Friday, you'd have caught from here to here. That's how many handles is that? 8, 9, 2. That's 70. That's 64 handles there. You would have caught that back into here. 64. There's almost there's 100 handles up to there. 50 handles down there. There's a couple hundred handles just sitting in that little. Do you trust your PD arrays inside this? It's 200 handles sitting right there that you could have just collected. Why didn't you? Somebody just said it. Why didn't you do it then? Abs, good morning. Thank you for asking. You've been sharing the invisible fair value gap on your Telegram. Hope you don't mind. Hey, no worries, man. The invisible fair value gap. I am not familiar with this term. Noticed it on there. I haven't studied it though. How's the theta and the beta this morning? We're all doing good. Thank you very much. Feeling a little SMT here now. I'll bet the 10 a.m. news gives us something to go with. High NQ futures things. I like YM. Would like to see the highs on the 1 minute be taken out before they move down. And that would fill the 1 minute fair value bonus coverage right here with the theta D news at 10. You just paid yourself again there at 50%. Again, that's that whole buffering thing I was telling you guys about before. That's your high right there. Premium array, 50%. Comes back, premium array, 50%. That's 309. That's 45 handles right there. Twice. There's 90 handles just there, visiting this 50% twice. Watch to see if it closes above this. Wiggle room's mean threshold. Now this, I don't even like that. It should be like snapping off of that. See how it's kind of just slowly working its way in here? I don't like that. See how it closed right on? It closes right on the body. Now you shouldn't be tapping into this again. I don't trust that. You want to see that just come up, tap these things and leave. Like this, because it just bips in here and then it's got intention to get the hell out of there, right? When you see that working its way up there and it just stops, settles on it, starts to work it again. As soon as it starts to come back and work it again, I don't like that idea. We could still close below it, but you know. Watch what happens in the next 15 seconds. Yeah, I don't like that. That's got some more intentions of going higher. Nope. See how it closed below it again? That would have shaken me off. The bodies of the candles are still respecting that. Swing. Watch this one here now. I just don't like the way this is acting in here. That's not those clean little taps off of the bottom and then leave. But you've got all these little same kind of wick action happening down here from like array to like array. You got the same kind of pattern happening here, so we'll see what happens. It's out of curiosity. I want to see if this from one extreme, bodies of the candles are respecting it with wicks down, to the other extreme, wick, wick, wick. This would be interesting now. This is whether or not you trust your arrays enough. This is where I start getting into my own head when I see all these wicks coming up in here. That mean threshold, you want to see that hold price. That's the wiggle room, so to speak. But look, they're still respecting that. Bodies are still respecting that fair value gap high. They're digging on this breaker, digging on this mitigation block. I'd have that sucker right up against break even, right in here now. I wouldn't want to see it revisit all this, so the stop loss would be pulled into here. Let me get this out of here now. You want to see this now become support. Drill below it, come back, find some support at it. Start drilling through here, this candle here. You have to get through the mean threshold of this, come back in, find support, push deeper into this range here with this discount stuff still sitting. Break these highs, come back, find support at the highs, push through. So see how you can argue both sides? If this is where you're going to go short, I'd be super nervous in here. Well, I would have been out by now. I would have talked myself out of this one already. If this continues through, wait for this to break the low, find support. That's the padding that you need for this to continue going shorter. But you could argue that this would be an opportunity for a place to go longer now. React off here, leave this open. I would be moving into profit right now. I'd be moving that sucker right into there. Had I not talked myself out of that one. The arrays are still proving themselves. So you're inside this small range. So pay yourself right in here. Ooh, quickly turned against you around the opening. Still didn't take the stop loss. Look at that. Would have taken mine. Look at that. You would have been close. Unless the gap of the spread opened up and took you. You'd be in a killer run right there. There's your discount array again. Ran all through these, order block. Swept some lows. If it cleans this high out here, comes back to it, look for here. If it comes into this breaker here, holds. Right there. Now you want to see that just keep diving down. Where is the carrot, you say? Where is the carrot? Okay, hey Darren, which prop firm you use for futures? I'm using Fivers. I wouldn't recommend them. They're all on MT5. I wouldn't recommend them at all. I hate MT5. I had some blind loyalty to MT5 for the longest time. Definitely not now. I like TradingView way better. So we're back up into that breaker one more time. For me, if you want this to go long, you got to get through here on a close, trade back into it. And the highs are too equal right now. So we've just gone from array to array to array to array, back and forth in here. You got to see one or the other of these give way. So this has to give way to continue going down. This one's got to give way to continue going higher. In my eyes, anyway. I'm looking to short the ES after the news. On YM, I will now be looking for the equal lows to be taken out around 38, and then either sell into the fair value gap if it results after the news. I think silver bullet for today. That's down. What do we got sitting over in here? Well, here's the reversal here in ES. You see that little reversal right here? Just block these out. You just need to see them enough times, I suppose. I still have to see them enough time. It rattles my brain when these things are so freaking obvious after the fact, or while they're happening. You see them go, oh, should I trust this? Yeah, you should trust it. You see it enough. There's your run above. Body breaks down below it, comes back up inside your breaker. You get another opportunity to get inside your breaker, and then you're running for these lows. Your rejection block, have you paid yourself at rejection blocks? NQ, do you see the same similar setup in NQ? You have a reversal right here, this big wick. We want to see the body get below here. Body finally gets below here, and then runs all the way through your overall start breaker right here. And then you trade back to it right here. You come back to it one more time right there. You get your rejection block right here. You want to see this order block, mean threshold, hold price. If it doesn't, comes all the way back up. Look for this here. If you run through that on the upside, something to be a little concerned of. They're not leaving this untouched though. So if you get a revisit in here one more time to the breaker, that'll clean up this piece here. You don't want to see it trade above it though. Pay yourself at rejection blocks, folks. You don't always get the swing, the low that you're looking for, but you will get the majority of the time. If it's running for a low or near a low, you'll get the rejection block, which is obvious. You'll get the rejection block before you get the low. Look at the range. And where's our opening range gap? Where's it down? You want to see this really start to get some legs now? Start hammering down. That's a nice little reversal there. What are you doing to back on down? See, Dow's come that it came off of our reversal. Body's respecting it. Stop loss still held. I can't believe that. Even after that news release. And we've got this massive rundown now. So you would add 200 handles in here plus, holy crap, 925. There's another 200 handles. 150 handles at least in here. It's whether or not you trust those setups. And clearly those are ones I'm still working on myself. Lows are taken now. So now you got to watch for a run back into the range again. It froze right on it. Nice. Keep coming. So this is kind of like your walk if you're using your failsafe and you're using the failsafe to run yourself down here or to manage the back end of this. you got a fair value gap above you here, your stop loss would be still sitting up high. If you're pulling your fib tool on that, you're doing your 50-60%, you'd be out by now. But if you're just managing it from PD arrays and you take a portion off here, and you're just managing it purely from the back end, your stop loss would be sitting here. And the moment this new fair value gap formed down in here, stop loss would move to here. Because if you break this on the upside, you're looking for a return back into the range. So that didn't get broken. The body's still respecting that. So your stop loss would be sitting here. Now you've got a new little fair value gap forming here. Eat some carrot. There you go. Let's give you some more carrot down here. And this is just Dow right now, so you're probably seeing similar fun in Dow's much more energetic than those two. You see that? Dow's the one to be playing in right now. So now you got a fair value gap here. You'd move your stop loss from here to here. You've got a new one starting to form here. So if that happens, stop loss would move to here. Because you wouldn't want to see this get taken to the upside. Otherwise, you've got to swing below a low, swing below a low. There's always that inherent risk that this could come back up again and clean these old highs out, especially after lunch or before lunch. And remember, anytime you make a new low, you should pay yourself a portion at the new low. So if this rolls over here, takes out this low, pay yourself again. And they're just like nibbling off little portions here. So then you got another fair value gap sitting here. So stop loss would be sitting right there in case we busted through this, start running up higher. Because this should hold price. And we should continue down here. Silver bullet, yes, nice little silver bullet there, Derek. You want to see this whole price here? I was looking at this inside that range. I'd be saying that's right into premium. See, the body did not break the high. Wicks do the damage. Continuation on the downside. These are nice little steps it's making here. Nice clean steps. My guess is that would have taken you out. Because there's a 1 and 2 handle. A 1 and 2 handle spread there. So there's 56, 58. With the news release, it would have opened up that spread. That would have taken you for sure. But the new entry opportunity to enter would have been right off there. Look at how the bodies are respecting that high. Mike T got himself a 100-point runner. Good for you, buddy. Right into the body of that breaker. Nice. I hope you guys are still in these. I hope you're collecting your handles, you're munching major pips today, major handles. If you're managing it from the back end here, you're doing awesome. We'll give it a little taste of carrot first. You see how this one here, that perfect entry, if a body trades above it, you can get out. It never did. And that's just enough to screw with my head. You could be in on something like this. If, mind you, if your stop had been taken here, and let's assume it did, then you wait for the new break in structure down here. Body breaks below the structure here, returns back up into this breaker, takes these highs out here. You trade back into it there and get short from here. So 38,885, 38,755. So you're 130 handles into that already. And if you just manage it from the previous high, $38,885 would have put you at 85 handles right there if your stop loss is sitting here. Look at all this candy down here. It's candy land. It is Candyland. Hope you got your short, Erica. I hope you managed to catch your short. Hope you all managed to catch a good short off of that. Another moose and a coyote today. It's got to teach grade 1 today. Crazy grade 1s. She's going to have so many stories when she comes home. She'll be just giggling about the crazy antics these kids will get up to today. There we go. We have returned to the base station before liftoff. Base station has been returned to. There is your SpaceX return, jettison, and then the slow descent back to ground pad. And from top to bottom, $8,958. Almost 300 handles. 270 handles from there. And that is the bottom of the hour. That's the high right there at 38691, 38691 right there. Perfect. So now we've touched that high right there with perfection. Now if you see this reverse, look for a run back up into that range. If we see a continuation, we don't want to see this get taken out now. around this area here now. It's not daily. Okay, long now. There's the reversal. Trade back into it. Again, your stop loss is sitting down here. Let's see that start coming back up here now. If you lose this low, yeah, continuation on the downside. So if I was managing this in the top down, that break in structure there, I'd close that out right there. If you hadn't closed it out at the return to that fair value gap fill down below. And it didn't quite fill the fair value gap, but it did return to the old high. Then you get this reversal happening here. So I'm bullish now. Excellent work today, Derek. Good work, buddy. Close below here now. You go bearish again. See where that closes in 4 seconds. 3, 2, one open below, so down, going lower. You close that out at break even right there. Opened actually below it. Come back, get yourself out. That would be my rule anyway. If it turns around and shoots back up there again, it's another one of those. Scared me out of the trade. And if it works this time, then all the better. Stop loss would have been here. As soon as it opened below that, you'd be out of that. So further downside, you're looking for or dig back into this, rebalance this little range right here, or this little end of the candle. And that is another, how many handles away? 3853. Oh, that's quite another. So the 140 handles away yet. This is the open. So I'll look for this open. Push again. Inside this range. Like to like. And bring it to this guy here. Nope. It's still got more downside. You can't even counter trend this inside this small little range here. What's that? Is that even 50%? Nope. You figure to get at least back to 50% of that range and then continue back down. Still hasn't taken the fair value, the stop loss though. If That's where you'd be putting it. And we still haven't broken a body below here yet. So wick would be just at the 50% would be the top of this fair value gap here, or inversion there. Take off some of this mess. I totally agree with you, Erica. Yeah, that's why I'm just playing in here. Don't have any vested interest in it today, even though some beautiful setups today. Just give me the 50% already. There you go. There's 50% finally. So put yourself there, move to break even. Even inside that small little range there, your stop wouldn't get taken, but you got 50%, move to break even, which is sitting right there. So keep your eye on that little area. So your imaginary stop loss would get taken right. Not quite yet, but it's at the bottom of that inversion. There. You would have been tagged out, but you would have made a little piece right there, counter trending that. Shitty way to make it, a rough way to make the money, but whatever. I'm just trying to show how price actions actually work in there. So if we finally trade below here now that you've hit the 50%, give yourself opportunity to continue down. I'm just trying to follow price action inside certain ranges. And that was 50%, just so you're aware. Right there. Right to the top of that one there. So now I'm bearish again. So return to that. Tap the bottom of it. We're bouncing off this. Is that a 1 month candle? One month fair value gap. No, this little inversion right here, or a little price imbalance. Yeah, it's a little price imbalance on the 1 month. So if that closes above again, now you're back to bullish again inside this consolidation. This becomes your linchpin and a full return to that daily. See how we've come all the way back in and filled this in here already? So do we have the cojones to run all the way back up here again for lunch? So you're looking for these reversals. This isn't a clean reversal, obviously, but you did get your 50% out of that. Move to break even, took yourself out. So now for me, I'd want to see this big candle right here get taken out to the upside before I got excited about going long on that. Cam modeled one entry right here, consolidation, body breaks above it, returns back to it. Cam model one, pay yourself at your rejection block if you manage to get up there, or the mean threshold of this candle here inside the range. The mean threshold. So cam model people, compare yourself at that mean threshold I mentioned. You can move to break even. If it comes back and tags you, you can either re-enter long or wait for this 1042 candle here. You want to get above this, so we've gone from like array to like array, even though you've had that run below. That would have thrown me off right there for a long back into this range. My fail safe would have taken me out there. A regular stop loss down here would have kept you in. And I'm not really picking much of a direction in terms of where I want everything. I'd like to see it get down into here, but I'm just following price action as it sits right now. And trying to hopefully explain to you guys why I think it's going in the direction it's going and what range it's in. So far I want to try and hold on to a narrative and not form fit everything or have people think that it's form fitted. It's actually following array to array, and I want you to see the arrays. So now we've got on top of this fair value gap here. See how that candle closed above it? And it may be just as small as that. Come back inside, find some support. So you're inside this bigger range from here to here. You're in a premium. You've come back up into the mean threshold of this candle and the mean threshold of that candle. So if it does roll over, you want to see this give way, find some support, push back down into the lower range here again. And you look for this little discount inside this smaller range we're inside now. If you break below here, you're literally that candle and this candle, and that's all the space you've got to play with inside that small range. So you could be starting to compress here before you finally break out. But we'll just follow the PD arrays as the candles as they line up. So looking for $50% to put us back into this order block here. Unless you go with this one here. Oh, I think you'd have to go with that here. 50% will put you here. Bodies are still respecting this. Wicks do the damage. This would be the next price leg up for high. Your cam model people, you got your 50% there. You came back, you can reload on here at the cam model 1. You come back into the mean threshold again, unload some more. Cam model 2 is right back into this inversion here. There you go. There's the full bill of the fair value gap. Got like array to like array, so we've got ran up here. Now we're running back from one to the other again. Inside that smaller range. I want to see this middle hold right here. Off of it. So now you got to think order block. You got this candle here and this candle here. That's where you're in the middle of. So you've got to push through here. Come down to that discount array again. That swing inversion. Hit it one more time. We've run all the way back up into that order block. Now if we eat through this here, got this one and this one, which one gives way? We're obviously bearish overall. We're still looking for this low here. We're inside this range here. We've traded below this candle. So if we trade below here, this mean threshold is giving way. This one here, okay, there you go. I like this one where the provided support came all the way back up into that order block and then said, all right, I've got no other place to play. Got to get out of here. Either am I either going to stay inside this fair value gap and wiggle around in here, or I've got to extend the range. And it ran right through. Now it's extended that range. Gap down. Nice. Heading for the carrot. It's beautiful. Thanks, Steve. Now the real discipline training starts. Staying out the rest of the day. This is by far the hardest hurdle. To start trading after winning a few or losing a few. I have an insatiable drive to want to trade more, especially when the clock says there's a whole lot more time left in the day. I think equal lows are suspect. On YM. Thanks, Steve. See you on TG this weekend. All right, buddy. Get out, take your money, run, Derek. Take your money and run, man. Go play some golf. Doesn't matter if it tears off on you now. Just enjoy your run, your excellent trade. Go into the weekend with something solid in your pocket, in your mind. You're feeling good about your trade. That's the way to end this. So good for you, man. Well done. And congratulations to all the rest of you who caught some news drivers. And this breaker here was a beautiful, I really love that one there this morning. This one here is, I like this. It really gave me a good shake off here, and it would have taken me out there anyway, but this would have been an opportunity right there to get back in for a short, and for a delicious short back to the home base again. So and I like what we can still call these little reversal moments, and when they switch up on you, and why they reach for a specific range inside this smaller range that they create. You get a retracement back into optimum trade entry and objectives to look for, and that makes sense. You want to see this thing provide support now. You don't want to be seeing this crap here. Give that some support. Continue on the downside. This has all been worked. I guess you could come back to the mean threshold of that, all the consequent encroachment of this candle here. It's been worked pretty good in here. Rebalance, continue on the way down. It's working to try and get through that monthly price imbalance. There you go. What's NQ up to? Oh man, is that ever just waffling around in there, hey? Just refusing to go down, even come back into that gap. Wow. Just went right up into the mean threshold, hit the old lows here. Give it a nice little reaction off of that. That is your same kind of setup here. Reverse back into the order block. Run the lows. Reversal. Body breaks above it. You come back deep inside it right here. Continuing on the upside. Like array to like array. Didn't quite make that one though. You have like array. No, you still didn't catch that one. Just run out these highs. Equal highs here. But we're back into that breaker again. We hit it here. Ran back up, hit it again. Interesting. We have a little reversal here above these old highs. Candle breaks down below the body here. Oops. You return back up inside it and get short. This is the same thing here as it is here. But you want to pay yourself at the rejection blocks. This is one of those. Are we heading back down into this discount array again? We've gone from body traded below it here. One candle went through one, two, went through both of them. This one traded up inside it for a short. Premium array, discount array. So as soon as you see that come into this area here, like array to like array. And there you have it, right there. So from that one to that one. Now you want to see this just start eating right through this one here. If it comes back in here, loads on one more time and then starts to run back up into like array to like array, look for this area up here to get revisited. A fill of that fair value gap right there. Now that we're in this range here, anywhere inside here, look for a run to back up into here again. So if you're going into 9, 10, 11, yeah, look to see if this holds. You're out of here too, Abs. Enjoy your weekend, buddy. Thanks for everything. Study, 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 folks. Learning the winds around. Good job, everyone. And Darren for narrating. You're welcome. Have a great weekend, Russell. What's my capital? What do you mean, what's my capital? Rohit, I'm not sure I understand. What's your capital for intraday trading? You're trading 1%, 2%, whatever your risk management is for your capital. So when you're looking at like array here to like array, look for the same thing in reverse, like array to like array, aiming for this fair value gap up here to fill. After lunch, I think you're going to probably run up into here. Or lunchtime's going to run for that. Well, I am doing. Ugh, it's getting really choppy in here now. That's getting into high resistance territory now. Now that you've got into that monthly imbalance, price imbalance, that's just a whole bunch of chop you don't want to be in. Take your money, move to the side, and enjoy your weekend. What's oil up to? makes that a high. One, two, come back up inside, short to here, inside this range, premium array to discount array. So you came back up into here, bounce, 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 all the way down to right there. Perfect fill. Like array to like array. What a perfect exit that is. How lovely is that? And if you trade from like array to like array again, like array to like array. So you've gone from premium to discount, discount to premium. Really nice. Inside here, you have a run above a high, trade below, wait for a body to get below here. Body gets below here. Oh, you don't get an opportunity to get in on that. You don't. If you just looked at this and said, oh, sorry, it's right here. I was looking at the wrong wick. This is the wick right here. So body trades below that wick right there. Then you trade back up inside it for a short. Wait for the reversal to happen. Reversal happens. Close your trade. We have a swing. We have a inversion, a little imbalance here. We have no inversion, or we have no inversion fair value gap on this side, so we have this imbalance. They act the same way. You come back, bing, right on it right there, and then you're going north. These are really nice entries. So like array to like array, discount to premium inside this larger range. There's your fill. Now you wait to see if this closes above this. Okay, so we're looking for a run back into here now for 60%, 50 to 60%. I'm looking for this to start providing support here. Look for a tracing back into this range now. You want to see price get above this point here. NASDAQ. We've dipped nicely into that mean threshold here. Look for a run back into the range here. It'd have to be this range here from 1045. 11. I still like this up here. I'm going to put that as an objective for the day. I think if we start to cut back into the premium array again, look for this. If this gives way on the downside, then continuation back into that big wick that we had today. If not, we get back up into here. What's Bitcoin up to? It's super clean, but you want to see this hold. If we start climbing above this, look for a run back up into, there's a little tiny one in here. See that right there? And this fair value gap here. We've broken structure to the downside. So I'd like to see this just hold price, roll over, come back down, or at least the mean threshold of this candle, halfway of this wick. Hold price, continue going down. Hold there. Let's see what gold's up to. Minute. Look for the 10 o'clock run. So there's 10. Look for a reversal. I don't see anything in here. You're really between this one here and that big sucker up there, inside that bigger range here. And we've come all the way down. We've dipped into this fair value gap, filled this one. It's not clean for me. We price rebalance. The reversal here. Back to the breaker, or mitigation block, I should say. Yeah, I wouldn't have had anything in there. I wouldn't have caught anything in that. I'll go through these a couple more times and then we're so we're through that. See the body pop below it. So now you want to see this roll over and come back down. See that body pop below? That's what you want to see. If you're wrong, you pop back up. Give yourself an opportunity to get out of that trade. That's just my setup. If that takes off now, this thing works for me more often than it fails. So there's your opportunity to break even right now. That's why this trade, when you want to go long, this is the best place to put your trade. In case you're wrong, you could break even, versus up here, you'll take this loss from here to here. And in this case, it's 22 to, so it's 14 handles loss if you go to there. Back to the order block. Let's clean that breaker there. Are we going to hold support on here? You want to see this mean threshold as your line in the sand. Otherwise, you're looking for a run back up in a higher part of the range. There's a little fair value gap up here. This is now body's traded above it and traded above this one. So look for a return to this one. You want to see that one kind of give way. Move that now. That just hit off the edge of that one. Like array to like array here. So look at the range that you're in from here to here. Premium, premium, discount, discount. You want to see this push through here now? Start going up into the premium array. That's the returns of the, we went through 1, 2, trade the second one. Small thing, but pay yourself at rejection blocks. Or use your 50% rule. There's 50%, so move to break even. Pay yourself at 50%, which is the rejection block, really. Now if it trades back against you, you nibbled a couple couple of ducats off of that. So 33 to, there's only 3 handles there. Not worth your time. If you manage to make it to the higher one, there's 5 handles. Again, the optimum one is right here. If it trades below you, comes back into you. Stop losses here. Not that you're trading these, of course, because this is high resistance crap. You don't want to be in this anyway. I'm just trying to read the price as it sits right now inside the range. And we're looking at areas that we want to see support or we want to see broken. We're just reading tape. That's all I'm doing today is just reading tape. No trades. I came in this morning super foggy brained. Not a good time to trade when you're in that mindset, but we've got some really nice trades today. So inside here, you can still come back into this 1, 2, 3. Pay yourself at rejection blocks. You'll hear me say that over and over and over again. Now you have to ask yourself, do I really want to enter in here and pay myself a couple of handles above? Or you always get gunning for these super high arrays? If you're reading it candle by candle, you're going to go to the next array that's inside your range. And if you're already paying a premium for it already, you better be prepared to get your, and I've explained this yesterday too. So if you take your range high and low like this, and you're buying in a discount, you're in the premium of the premium and the discount of the premium. And this is the premium range, the discount range of that small little. So if you buy in a discount of the premium range, you want to sell in the premium of the premium range. And what's the array that's left is your rejection block. So if you're trading inside here, premium discount, when you're looking at like a bull flag scenario and you're in the premium, so if you're buying and selling inside that, you want to buy and sell inside the premium discount here and keep aiming for the next one above you. But be prepared that if you start to drift down into the discount array, you're out of that premium portion. Now you're back in the discount. See how you enter in here, premium, discount of the premium, premium of the premium, discount of the premium, premium of the premium. That is your 50% line. This becomes the new price leg up higher. You want to start reaching up into that like array. See how we've dipped down into this bottom one now? That's the discount array. And you're reaching up into the premium portion of that big range there. So there's 50. You want to get into that. We just hit it right there. Discount to premium, all in 2 candles. Like array to like array. Or if you want to go shorter one, closer one to the midpoint, like array to like array, premium array, or discount array to the premium array has to go up here. There's 2 there, there's 2 here. Not that this is always equally balanced like that. So I'd look to see if that would come back, find some support at this order block here. Now that we've traded a body above it, now you're looking for higher prices. And we're looking for that higher array. This guy here and that guy there. And I'll just put lines there so you get an idea of what they're like. I don't want to see this break on the body on the downside. You don't want to see this close below here. Hello, Master Trading. How are you? You're 2 days in a row you've been here now. What the heck? How do we, why do we deserve this royal visit? This is great. Did you catch that nice little breaker run off here this morning? You're a smart dude. I'm sure you would have seen this sucker right there for a short. That would have caused you some. Lots of people have been catching that. We were calling that one this morning. Some beautiful runs. Lots of opportunities to see this repeating itself, slowly stepping down this morning. So I hope you caught yourself a nice little run this morning. Watching this level right here. This level and then that candle. Really eating into this breaker here. All three of those, add them all together. I like to look at the last one, but you incorporate all three of them. When you see 3 in a row like that, 2 in a row, 4 in a row, whatever, that becomes the overall breaker. That would be like a 3-minute breaker. Or all three of them together would beat that. Look for the mean threshold of that to give way. I like looking at the last up close candle. But yes, you do look at all three. At least that's what Michael teaches anyway. This is the daily on Bitcoin, hourly on Bitcoin. See how this, you get this swing here above this high, swing, body breaks below it, trade back up inside it right there. Perfection. Keepers, that's a beautiful entry right there. Right there. This high is taken here. That low is taken right there. That fair value gap, trade below it, trade back up inside it right there. There's that perfect entry I was telling you about, that if you take it and you go long, it ends up going long on you and you get out. But if you catch it, that's that snap off I want to see, right? So it's perfect entry right there. Snap off in that hourly candle. And look at this run. From here, 66,700. And look where we're sitting right now. 61,000. I feel like I'm hearing an alarm going off somewhere. So here you see this high get taken out here, right here. Body trades below it here. There's your whole range. This candle takes out the lows, takes out this candle here. Body trades below it. You come back right off it here, off the low. You don't even get to get in on that one. You don't get to get in on any of these. It's a long reversal there. Body trades above it here. That'll be an ugly one to play in, because if it comes all the way down to here and then starts to trade through you again, that's not one you put a lot of faith in that. You'd have to have 1% way down here. You're risking very little to get in on that. You're going like array to like array. It's reversing back into this candle again. Minute, just so you can change it up and have a look at different candles and you'll see these highs get taken. Look for a swing to happen. There's your swing. Body trades below it. Trade back into it right there. Perfect entry. And all you're waiting for is just a reversal. Any one of these lows that get taken out, look for a reversal to confirm. So you have no, this low is taken out. We have nothing. Here's your first one here. Body does not trade back through it. You continue on the backside, going all the way back down. Consolidation. Low is not taken out yet. It's taken out here. Body trades above it. You come back. If you've got long on that, or if you've got, there's that reversal. So if you take that long there, and you take the long here, and you're wrong, and it trades below you, comes back into you, you get an opportunity to get out before your stop is taken. Get back in line with the market. You've traded below, so get short. Continue short. It's whether or not you decide to get in and out off that. You trade below. your inversion. How much faith do you put in your inversions and the rejection or the fair value gaps when they become inversions, and then you break them to the downside that supports a further continuation on the downside? How much do you trust this to say, oh, I'm on the wrong side of that? I've gone long off of this here. I've gone long. Oh, and it's traded below me here. So that's going to be my entry right here. If I'm long, that's my ideal one to go long. If I'm wrong, and you are right here, and it comes back into you, you get to go out, take your long off and put your short on to go. And I guess it's easy to say in hindsight, but keep watching these things. Watch for these breaks for the downside and the re-entering into it to see if it continues to prove itself to you. And go back and check in hindsight. It's the only way you're going to get confirmation without any fear. Here's another opportunity. So if you said this swing took out that low, and I want to go long, and I want to go long at this point here. That's the best point to go long. It trades through you, comes and hits you and drives right through you. You go, oh, I've traded below me here. I'm on the wrong side of this. So as soon as this one opens, comes back up, you get yourself an opportunity to get out. One time here, trades all the way back down, would have taken out your stop loss. So wait for a revisit of this here again. So as it trades through it one more time, comes back, and no, you don't get an opportunity there. So you wait for this breaker to get taken on the upside. It does right here. Does it come back to it? Right there and there. It hits it perfectly there, and you catch the long. Above here, pull your fib tool. Use your fib to run it, whatever you want to do there. Here's that range. Here's the swing point. There's your fair value gap. Here to here. Body trades below it right there. You don't get an opportunity to get in on it. So you think, well, if it breaks this low here and comes back into it, I'll continue on the downside. It doesn't. It just comes back into the mean threshold of that. Trades all the way back up. Now you catch it. So you catch it 1, 2, and 3. Those are your 3 points. There's your wiggle room there with that extra little piece of that fair value gap. It fills it. Now you go short off of this one that you've been waiting to get in on. When it broke below here, you didn't get a chance to get in on it. Now you get a chance to get in on it. You get confirmation here. Break below, come back up inside. Continue on the downside. So you're back inside that whole range again, back to that breaker. High, open, mean threshold. Comes all the way back into it one more time. We get a reversal. We've swung below a low. Reversal, body breaks above it right there. You come all the way back into it here. If you trade below it, you go, I'm not sure. Maybe I'm on the wrong side of that. You're on the wrong side. Then all of a sudden it breaks above again. You go, okay, I'm going to catch that one for another. It's changed its mind. It's gone back up the other side. Now you get long on it for continuation. How you trust these things, and you make up your own set of rules there. You don't have to follow mine. You don't have to call mine right or wrong. You get to decide there, or you just ignore that and continue on with your study of price action. Through my study of it, that's what I see. From what ICT has taught us, that when that becomes an inversion, right now it's just a reclaimed fair value gap. It's reclaimed. It's not till you break through it that it becomes an inversion, and now it becomes, for me, a higher level array. It becomes, I consider it like being promoted. It's now a senior array. So when a fair value gap turns into an inversion, to me, it gives it another level of support and strength. Oh, you're just driving to the gym and getting a coffee. Good for you, man. Relax, enjoy your day. Relax and enjoy your day. swing, you don't get any opportunity to get on this. You want to see this now. Now that you've taken these highs out here and you've come back to an old low, I'd want to see this right here break to the downside, come back up, find some support at it to continue pushing through, because your breaker is way down here. So you want to see this right here break to the downside. Otherwise, this could continue pushing higher. Let's go back to YAM. YAM is definitely pushing higher. Came back into our range. Order block. There's your breaker. Body trades above it. Come back inside it, all the way into the mean threshold of it. Push higher through here. You drip down into this imbalance right here. Fair value gap all the way through here. You got to give it some wiggle room to get back down into a discount portion here. Push higher. Finally clear out those old highs. So we must have hit my double sticks up here somewhere. Where were we at? Yeah. So we went right through. So like array to like array. We blew through that now. Get a body above here. Come back to it inside it. Continue higher. Now you're looking for a higher array. And you see how we've seen this, the reversal. You guys can decide whether or not the reversal's enough for you inside here. Aim for your immediate array. And if it doesn't work out and you see this high get taken and you see another fair value gap forming in here, you think, oh, this could be another reversal back in the other direction again. So I've got to prepare myself to take trades off at these highs. And when this reversal happens, keep your eye vigilant. Every single time you take out an old high, be very vigilant when you see these things break down, come back up, and you go, oh, now I'm on a downside run. Inside this range, where would I aim for? There's a discount array down here. You come all the way down to it, and it trades through, and you go, wait, now I'm sitting on the sidelines because we could be taking out this old low. Sure enough, you take out that old low, then you look for this reversal. You say, as soon as these lows get taken out, like I was telling you here, as soon as those lows get taken out, you're looking for this reversal pattern to start setting up. As soon as that happens right there, you go, great. This bold candle ripped through one, and there's another one right here, and then that is a breaker for this run below this low, that and those lows there. That's your breaker. So you look at that and you say, I want to see that hold now, and either this candle will rip right through it, come back, find support at it, and continue on, or I want to see it running back into this range. Give me a little discount in this range, would be right in here somewhere. When we pulled the fib tool, it was sitting in here. Let me just pull that again, just so you get the idea. It's kind of like the mindset that I have when I'm looking for these. Nope, there is no 50%. It just dipped into that second or the first PD array entry right there. Gives you your opportunity to go long. If you were looking for the perfect entry, you wouldn't have got it. That's why there's 1, 2, 3. So you have those 3 different areas, and you have 1, 2, 3 in there. That you might as well just take one. But every time this rips through, both of them at the same time, aim for the first one, or the second one, I should say. And the first one is unlikely to fill until later. You want to see it stay open anyway. You want to see that be your breakaway gap, right? So always look for these things when you clear these old highs. Look for the opportunity to see this, and if you miss it and you say, I got taken again, look at, did you pay yourself at the rejection block? Did you pay yourself at the old high? Did you pay yourself at the breaker, the mean threshold of the breaker? Like you have to decide for yourself where you're going to be putting your buy and sell orders, what's important to you in that breaker. Are you constantly going to keep aiming for this, and then you wait through all of this, and you could have made lots of money. When we were talking about that YM this morning up here, like there's tons of times you could have made like 200 handles in here just off of this small run from here to here to here to here, and then back and forth in here a bunch of times. You could have made money. Then your reversal here, and then finally the big one, you had like 200 handles in your pocket here, and then And we didn't even count these two, just 200 handles in here. That would have been 400 or 500 handles plus this massive run down here to base station. Like, beautiful runs. Now this is that stepping stone thing you see happening here. Coming back, finding support at the order block. Coming back, finding support at the order block. And you're looking for a higher run. And I'm telling you again, I'm aiming for back up here again for the afternoon. And you saw it starting down here. So there's no excuse. You guys, you can't tell me that this shit doesn't work and that we haven't shown you multiple opportunities all the way through here. Sometimes you get beat up on the wrong side, the right side, the wrong side, the right side. And you might get beat up a few times when you're in consolidated markets, but that's the pain you get in consolidation. High resistance. That's the kind of environment you're in. But when you start to see 11 o'clock, the reversal back into the range that I was telling you about, at 11 o'clock, there's a reversal. Expect a reversal for 50 to 62% of the range. And there's your 11, 11.10, takes out a low. Wait for your reversal to happen, which is what we've just been talking about. And then 50 to 62% of your range. So if you pull your fib tool from high to low, there's 50%. Let's go to equilibrium. Oops, not equilibrium. 62% here. And if you get 62% and it still rips through it and you don't have anything that supports a reversal above an old high, look for further upside. But that's your first objective right there. And I was calling that at 11 o'clock. Go back, have a listen if you don't believe me. We're also calling for this. I'm not denying that I was calling for this further down, but we did not get proof of that. We had a change of direction. We have that imbalance, price imbalance on the monthly. That's the price imbalance on the monthly. Look at that. It just came back, filled it nicely. And then we got the reversal. Higher time frame premises have much more strength than these lower 1 minutes. But you'll see it on the 1 minute starting to happen. At a time, price of your choosing, you see the reversal. You're expecting to see it enough times, trust it. It's not a case of me having to prove it to you. You have to prove it to yourself whether or not you believe these arrays work. 12 likes today. Wow. Guess people weren't too impressed with the day today. That's all right. We picked up 2 new subscribers. Welcome all the new people, or you 2 new people from yesterday. Welcome. Swing, see this? Come back into it right here. Short now. Look at the range you're in. What arrays are sitting down here? Take that low. So now the lows are taking. Look for that reversal. Otherwise, you're still short. See how these highs get taken out? And you see the reversal happen, and then you see the candle rip through it. Trade back up inside it right here, perfectly short. If you're wrong and it goes higher, you'll be able to get out right there. Right now, you're paying yourself at these lows. And you'll say, hey, 50 to 62% retracement. Did we get it? Damn right we did. Now I'm expecting a reversal back. Now, start looking for this. If we don't get this, this may be a month next week. That's fine. If we keep that intact for next week, I'm cool with that. If not, we want to see this side get broken again to the upside. You want to see a reversal. You want to see these fair value gaps break to the upside, break through this guy because you're between one and the other. You want to see that break to the upside, get through here on the upside, and then continuation. So this could be the next price leg up. And did you pay yourself at these lows? And if you see the reversal, you can get back in the reversal for a continuation. You can stay in price action as long as you like. It's whether or not you trust it enough and how much you're risking. So watch here. And if you need to draw out your area here, draw it out. With the overlapping one up here. See how you're between one and the other. So you've tapped one, you're inside the other, you ran up, tapped it. You want to start really driving through here now. You want more upside. That's what I'm saying. If you bought here, you better be paying yourself real quick at the next swing point. You always look for the next swing point. Pay yourself at that swing point. Or pay yourself at the array that starts the swing point. The breaker. High, open, mean threshold, that gap. There's lots of opportunities to pay yourself. Small little run from 812 to 782, 88. Like that's 12, that's 24 handles right there. Just from there to here. If you took the low, there's 32 handles. If you ran back to the fair value gap, you know what I'm saying. See how we've traded above this now with the body? Now you start to think, okay, now I want to go long. And I'm between here and here. This one wants to go long. This one wants to go short. When you're overlapping, that's all the space there is between those two decisions to go higher or lower. So what do? You sit on the sideline and wait. So you either wait for this candle, if it takes takes that candle there, takes that low. So you want to see that one get taken with a bold candle, come back, find support at it and push on. Or you want to see this one get taken on the downside, come back in, find support at it, and continue on the downside. So you're looking for your outside arrays to support either higher or lower. Which one do you want to go with? Now this monthly, look at this liquidity pool down here and this liquidity pool sitting up here. And you're sitting right in the middle of the range right now at 50%. Right? Right at 50%. So you push in for higher prices. This now becomes a big price leg up. That's what I want to see. So if that starts to happen, then start looking for this candle here, or this fair value gap here to break to the upside, find support at it, eat through that guy. Nice big bold candle through both of them would be nice. Now you've got the upside, so now you're bullish. Find support off of that. Start pushing higher now. So you've already hit the rejection block here already. So if this was the one that you were saying, oh, look, I'm going to go long now. This one here, you're going, oh, I'm going short. You took your money out there. Then you went here and you go, oh, now I'm going to go long. You got your long in here off the mean threshold of that candle. You pay yourself a rejection block here. You see the support here. That's a nice little buffer. That enables you to say, okay, I still like long now. So got double confirmation. So you got this one to go long, breaking above, and you've got this one broken to the upside to go long as well. Looking for various different ways to validate your entry. And again, this is right in the middle of price action, candle by candle. And you're looking for the array to array. Now, this is no different from a daily candle, monthly candle, hourly, whatever time frame you're on. If you identify what each one of these arrays are doing and how you find support at them, and you get really good at reading price, you'll be able to use this on any time frame whatsoever. And if you guys have your own setup to run higher or lower, whatever your setup is, you'll understand it so much more sharper now in terms of where you want to enter your trade when you understand price action in the clean way like this. I don't know, Michael doesn't believe in 1 minute charts, but if everything he's taught is fractal, then he can't dispute that 1 minute charts produce the very thing he teaches on all the other charts. It's fractal, and it is fractal. And you'll see if I'm full of crap if I'm not calling these things the way they're happening minute by minute. So you'll know if it's wrong. I'm not fumbling over arrays. I may call something a rejection block all the time or a fair value gap, but I'll try to correct it. It's not always that. That's my ADHD. My mind's ripping ahead to multiple different things inside my mind. So I trip over words sometimes, but hopefully you see the logic in what we're talking about here. We, as in me and all my multiple personalities. They want to see a body get above here now. See how we're finding support of that? Bang. And so far it's acted just the way we wanted it to act. We're not form-fitting it. We're just proving that you better be paying yourself at these levels, because we're looking at these small little ranges that you start stepping outside of. And the moment you take a swing, I was telling you way back here, looking for all those opportunities for looking for swings, you had a chance to see it live right there. Say, okay, so now you've taken out that low. We look for an opportunity to see a swing. We're between this one and this one. We saw it pop up, came back in, found support at it. That gives us our swing. Now we're looking for that high to get taken, or this guy to give way if we want to go bullish. It did. So that gives us a buffer, confluence, further confluence that we're in the right direction. We've taken out that high now with the high, and now you look for, is there another swing now that we've taken out this high like we did here? We look for a reversal. Is there a reversal sitting in here right now that confirms that swing? Well, there is one right here now that we've taken that out. So if we drop below this, this is where my eye goes right next as I go in here. And it's rinse and repeat over and over and over again. Like Michael says, it'll get boring after a while, but you'll start to see the validity in what I'm trying to show you here. And if you do, hit the like button. I guess, I don't know if you guys enjoy it or not. I guess we're growing 2 people at a time here, so it's kind of nice. If it makes sense to you, let me know. Hit the like button. And if it doesn't make sense or you don't agree with it, stick around. Come back again on Monday. We're here every day. So now we've got a body traded above this right there. See that? Now you come back, tap it. Now I want to see it leave it. You can come all the way back into it, or all the way back into that inversion here. Inside the range, premium discount. You got a premium one here, and you have a discount one down here. Right there. Looking at that range, you'll say, okay, so if it breaks through here, then we're looking for a run back down into here. If it doesn't break through that, then we're looking for just a retap of this old fair value gap and a continuation to the upside. Otherwise, we're digging deeper into the range. If we close below this, then we're digging deeper into the range. Well, where's a discount array? There's this breaker down here and this fair value gap below us here. There you go. We come all the way back down. Look at your range. You hit right off of 50%. So we could get right into 62%. But like Michael says, all you need is 50% of the range. Right there. We just inched underneath it. We tapped right at the edge of that imbalance right there. So here's your wiggle room. You say to yourself, now does this automatically mean I'm going lower? No, it just means you just ran quickly to the 50%, to that little imbalance. You just tapped the edge of it, and now you're back up above this. When that closes in the next 5 seconds, you're back into a bullish run again. So it was just a quick run back into 50%. So now for me, I wouldn't want to see this get revisited. Otherwise, we're stuck in this little range. If we start coming all the way through here again, getting back into here, then you go, okay, so now we've got a deeper retracement. And then you're stuck. You're stuck between here and here. So you want to see this now. There's a little padding there now. You've just validated this candle right here. So mean threshold would also be this top of this fair value gap here to continue to the upside. I just want to see that go now. Lunchtime should take out the morning high or low. Now we're going into lunch hour, and it should take out our, oh, have we hit our 62% yet? This was 50 down here, so nope, not quite yet. We're above the 50% range, so if we come back, bounce off of that, look for a run back up higher. Put the carrot up here. This would be interesting to see this just continue pushing up here for Monday, like ending up creating relative equal highs again, and then taking it out on Monday. Monday or Tuesday takes that high out back into the fair value gap for a drop back down into here. Leave this open. That'd be nice. Leave that open and continue pushing higher so that we next Monday we see this high taken out, Tuesday fair value gap, and then a run back into premium discount. That's a big ass breaker right there. Taking out all those highs. I like that. And then a return back to it, and that little imbalance there for next week. And right now you're bullish, so until we see that one coming into view again, I'm not aiming for that right now. I'm still pushing. I'm in a bullish trend, so where's my next upside? Daily objective to revisit the old high, or at least inside the range I'm in, the next upside objective. Look for this fair value gap here to give way, and this one, that one, that one. Love the high resistance stuff. Swing, continuation, came back to the top of our fair value gap again, right here. If you really want to get picky, here's a swing. Right there is your reversal. Body traded above it right here. Came back, tapped it perfectly there. Aiming for here, here. Then you look for this reversal here. You want to see a body trade below that. You're inside the range. So if it does reverse and come back down, if it does take that out, then you're looking for, is it coming back into this range here? So look for 50% of this first though. See, 50% right on the money, and then continue to the upside. Even though it body traded below, it just came back. So pull your fib tool and give yourself that wiggle room. So you want to see that snap off of there now and start going back up. When you see this enough times, you'll start to say, this is what I want to see. When does that get disproven? Well, thank you all you 25 people that are still sticking around. I appreciate you sticking around. I think it's going to be it for me now. The afternoon might be a little more delicious. Look for a continuation up there. I don't think you may get your afternoon. What's this one, 2, 3? No. No TGIF Friday today. High resistance now. Not fun to be in. Move to the sidelines. Have yourself a fine weekend. I'm going to go out, get some walking in for the weekend. Appreciate you guys turning up the way you have. Thank you very much. Thank you for all your support. Thank you for your kind words. And if you like what we're doing, again, pop on in on Monday, Tuesday, Wednesday, Thursday, and Friday. We're here all the time. If you want to be in on the daily chats, sometimes we chat, we do some live stuff after hours on Bitcoin. You know, if you're still trying to learn this stuff, come into the Telegram channel there. There's lots of people in there still learning this. They're sharing their they're sharing their pictures, their screen captures. They're asking questions. Don't be afraid to ask questions. Nobody in here is going to try to make you feel bad. If they do, they're gone. That's not what the environment is that we want to create here. We've got super nice, awesome people in the Telegram channel already that are willing to help out wherever we can. So ask questions. There's no bad answers, no bad questions. If you're in there trying to advertise, you'll be asked to leave. Just be kind, be respectful for each other. If any trolls, again, trolls are you're going to be trashed. You're going to be gone. But otherwise, pop in to the Telegram. You'll see us in the link in the description above, or not down below. It's in the bio above. Have a look at that. You'll see there's 4 different links. You can just click on the Telegram link, and you're welcome to join us anytime. And if we take some Bitcoin trades after hours, you'll be a part of that. You'll get to watch it. And we like to post. There's a few of us in there that like to post our trades and our setups. It's not just about trying to make money. It's about your setup. Your setup's important. ThetaWave is a mindset. It's not a person. It's getting in the right mind frame. As you saw, I didn't take any trades today. sometimes it's just a matter of sitting here, just want to read the charts, and you know, there's beautiful, awesome opportunities to get in today. I didn't take them. Doesn't make me a bad person. Doesn't make me nuts. Just that was my choice today. So, I hope you guys got to learn something today. You got to enjoy something. And silver bullet time. It says lunch hour silver bullet. The lunch hour. It's a consolidation of mess. Anyway, I wish you guys an awesome weekend. I will see you tomorrow in the Telegram, I'm sure, or tonight in the Telegram. If not, I'll see the rest of you guys on Monday. Thanks again for all tuning in. Have a safe week.